All right, hello, this is Mike with netpicks.com and the Options Mastery Program. In this video, I thought I would take a couple minutes, walk you through what I'm looking for here in today's session. Today is Wednesday, September 23, and then we'll kind of talk big picture as well, what I'm looking for over the coming days and potentially the coming weeks. We'll walk through some setups that I'm looking for over the next couple of days, some things that could potentially be on our radar here over the next couple of trading sessions. So let's go ahead and dive right in. Let's take a look at the overnight futures. Pretty quiet session, all things considered. You can see the Dow futures up right around 16, 17 points. The S&P futures up just under $1. NASDAQ futures up just over 5, and the Russell futures up right around 2. So we've seen some pretty massive moves during the overnight sessions over the past few weeks. We've seen a lot of news out of China, news out of Japan, news out of Europe, all of those happening during the overnight session for us here in the US. So we've seen some wild movement during those overnight sessions, which oftentimes leads to large gaps for us here in the US. The gaps to the upside and the downside, making it really frustrating for us because unless you're trading the futures markets, there's really not much we can do to participate in those moves. So it's actually good to see a little bit quieter session here pre-market for us today. We did see some decent movement overnight with some news out of China. We do have some upcoming news out of Europe with Draghi speaking here this morning. So we could potentially see some fireworks here over the next couple of hours. We'll just have to wait and see what happens. We'll go over to the longer term daily charts in just a second, walk through some potential support and resistance levels to be aware of if you're trading the broad market index ETFs. So a couple things before we get over to those charts. Let's take a look at volatility. You can see the VIX up here. The VIX is currently sitting right around 2250. When you start to get the VIX into low to mid 20s, that's a good thing to see for us as active options traders. When you get volatility elevated, it really opens up our playbook. It opens up what we can do with options. We're not just limited to buying calls and puts or buying vertical spreads. When you get volatility elevated, you can actually go in and start selling premium, which we've done quite a bit here the last couple of weeks. So when you get volatility in the low to mid 20s, what that typically shows us as well is that the market's seen some two-way price action. We've seen some moves to the downside. That's also followed by a pickup in volume. And we've seen that. And when you get the pickup in volume, it just makes life easier for us as traders. It makes it easier to get in and out of trades at good prices. Oftentimes, I preach to my students, try to get filled at the mid price as much as possible. Make sure you're paying attention to where you're getting filled at on these prices, because a nickel or a dime savings over thousands of trades over time can really add up. So we're really conscious about where we get filled at. So I love to see the big time volume. It makes life easier for me as a trader. If we go over to the Market Watch tab, this is the list of many of the products that I look at personally on a daily basis. I've got a column in here showing the volatility for each one of these products. And what I want to see over time is I want to see this list with a good number of names with IV percentiles above 50. Okay, meaning the volatility on these products are in the upper end of the range over the past 52 weeks. Okay, when that happens, it really starts to open up what we can do on those names. And in fact, on the names on this list that have volatilities above 50, there's many of these that I have multiple trades on right now. Because I know when the volatility increases, the opportunities increase as well, and I'm trying to take advantage of that. So I'll walk through a couple things that I'm potentially looking at here over the next couple of days. We've also got a whole cluster of names with IV percentiles in the 40s. Okay, so it's not going to take much. If we get one little move to the downside here over the next couple of days, you're going to start to see this list of products with elevated volatilities really expand. That's good. That's great for us to see. That's going to give us a lot of opportunity here in the coming weeks. We also have to be concerned, when you start to, this is Thinkorswim here that I'm showing now. With some of these individual equities, you're going to start to see these little icons pop up, the little red phone and the blue question mark. A lot of these names, we're going to start to head into earnings season as we head into October, so we've got to be aware of that. Okay, it's not going to prevent us from doing anything now, but in the coming weeks, we don't want to get overloaded with positions heading into earnings. okay, on individual equities. I don't like to get blindsided by those big overnight earnings moves. So for me and many of my students, we don't typically do much with the individual equities during that stretch. We shift our focus more so to the ETFs. Okay, let's take a look at the daily charts. For the sake of volatility here, I would like to see the market move to the downside, because if we get some selling pressure, the volatility is going to pop up, the volumes are going to pop up like we just talked about. So in a perfect world, that's what I would like to see happen. But what are the price charts telling us here? Is that backing up what I'm looking for? Well, here's a daily chart of SPY. This is the S&P 500 ETF. So this is the big move to the downside that we were talking about earlier, going back a couple weeks. We finally got the pullback that we were looking for. Now, I wasn't anticipating the big pullback happening in 3-4 days, but that's really what we saw. It was a very swift move to the downside, and since then, this market has tried to grind its way back and try to recover some of those losses, and it actually did. It actually recovered a good amount of those losses. We did find resistance right at this solid yellow line here. That happens to be the 50-period exponential moving average. That's where price action stalled out. So let me just quickly pop open the box. These are the indicators that I have on this chart. Just a list of basic moving averages, combination of simple moving averages and exponential moving averages. I'm looking for areas where the market could potentially stall out, or where the market could potentially find support at. So they're very helpful levels as I try to get a quick read on how strong or weak the market could potentially be. So we did find resistance there at the 50-period exponential moving average, and we started to roll back over to the downside. Now the big level here over the past couple of sessions that we did see break was this dotted green line here. That is the 20-period simple moving average. That was kind of the last line of defense there for the bulls that were hoping for the V-shaped rally to the upside. Now that that level has broken, okay, we could potentially be looking at a move to the downside and potentially getting down to retest that low at 182.40. Okay, you can see that low right here. Now on the way down, you'll notice that all the moving averages that I cover and that I track, they're all up above us. So we've got a whole list of areas above us as areas of resistance. So if we start to get that rally back higher, those are going to be the first areas that I'll be looking at. The first area is going to be that 20-period simple moving average. It's now right at that 196, 195.90 to be exact. Okay, that'll be the first area where the bulls are going to have to fight to get up through. Okay, down below us, with no moving averages that I track below us, my focus shifts to those areas right around 0.50 and 0.00. So I'm talking about 192.00, 191.50. Those areas tend to act as support and resistance quite often. You see market moves stall out at those levels quite often. Okay, so that will be an area that I look at. Some of these little swing levels. Okay, we got this little low right here, right around 191. We've got this low right here, right around 191.60. Notice that those lows happen to be very close to 0.00 and 0.50. There's a reason why we pay attention to those levels. So we can look at those. If we start to get some selling pressure here over the next couple days, we can look at those areas for areas of support. Let's see if we can get some drawings on there. So talking about these little swing levels, I mentioned 182.40 as a potential area for a double bottom to look for. That's something to keep in mind. So looking at this chart, we've seen the bounce higher. Notice what happened on the bounce higher here with the volume. I've got volume shown down here at the bottom. As we moved higher, the volume continued to move down, to continue to contract. Okay, so the bulls, even though they recovered a good portion of the losses, they started to lose some steam there. They started to lose some ammo on the upside. When we hit that area of resistance at that 50-period exponential moving average, we turned pretty quickly. And notice what happened to volume. Okay, the volume started to pick up. Okay, so the move on the downside, that's what we typically see over time. The volume starts to pick up. Okay, now technically speaking, I mean, this market looks like it wants to head lower. I mean, the technicals are backing it up, the moving averages are backing it up, the volume and volatility is backing it up. The one wild card here, okay, is the involvement of the central banks worldwide. Okay, whether that be out of China or Europe or here in the US, it's basically a coordinated effort to prop up these markets right now. And we don't know what's going to happen down the road. We don't know when these announcements can come. They can come out of the blue. You never know when a Fed speaker is going to pop up and make a statement that could potentially move the markets. It makes it very tricky when you're a technical trader like we are. We're focused on price action. We're focused on the charts. It's difficult when a news event, when one Fed speaker can throw us a curveball and just cause havoc in the markets. So if you're basing your trades purely off of technicals, I'm inclined to think the market's headed lower. Okay, and I've told my students that I don't think the low is in yet. I think we're going to continue to head lower, heading into this fall. Okay, now if something happens here out of one of the central banks, or if a Fed speaker comes out and makes an announcement and we head higher, of course we'll change our thinking here. But the way I'm going to react to this chart, I'm not necessarily trading based off of price action on this daily chart here. What I'm using it for is to help determine my overall position size when I get over to some of the individual charts we'll take a look at in a second. Okay, so if I look at this daily chart and I take the opinion that we're going to head lower, then when I start to look at charts on Apple and Amazon and Google, if I get short setups, I'm going to get more aggressive with both the strategies that I'm using and with the position sizes that I'm taking. If we get that V-shaped move higher, if we get the continued move higher, we start to test some of those resistance levels and we get some long setups to print on our charts, I'm going to be a little more conservative. Okay, I'm going to use smaller position sizes. And I'm going to use more conservative option strategies. We've got a lot of flexibility there in this types of strategies that we can use. So I'm just trying to form an opinion on what I think the market's going to do, and then I'm going to adjust my trading decisions accordingly. Okay, so that's SPY. We can take a look at the NASDAQ as well. This is symbol QQQ. It's the ETF that tracks the NASDAQ. And it too saw a pretty strong move to the upside and started to test some of these key levels in here. The dotted lines in here, the yellow, red, and green dotted lines, those are the simple moving averages. That yellow line, that was the 50-period simple moving average that we tested and found some pretty strong resistance at. And we're starting to head back lower. So the key is for us to get a solid move below the 20-period simple moving average. That's that dashed green line. So what I want to see happen over the next couple days, I want to see a session where we get some nasty selling and then we see a close near the low of the session. Okay, if you take a look at this candle from yesterday, notice we did get a move below the 20-period moving average, but we saw the close up near the high of the session yesterday. Okay, not the breakdown candle that I want to see for a move to the downside. So there's a lot of uncertainty here. So over the next couple days, if we can get that nasty move to the downside where we get selling into the close, we get volume to pick up, that's going to confirm that price action's ready to head lower, get back down to test some of these support levels. Those could potentially be at these swing levels here, right around 101.50. We've got this one here at 150. Notice again, they're right near those 0.50s and the 0.00 levels. So those are going to be some target areas on the downside should this get a little nasty over the next couple days. Okay, I want to see that move because volatility will pop, volume will pop, all things we just got done talking about. Okay, so up above us, if we see things start to rally here, we've got that whole cluster of moving averages up above us. So you can clearly see the cluster right here. Those are all going to be areas of resistance. So the bulls have the work cut out for them to get this thing moving back higher, back up to try to get up near those all-time highs over the next couple months. So let's see what happens. Again, the wild card there is the Fed and the central banks. See what they do to try to continue to prop this market up. Finally, let's take a look at the Dow. This is symbol DIA. It's the ETF that tracks the Dow. So once again, much like the S&P, we found resistance right up near the 50-period exponential moving average, and we have since moved lower. So you can see yesterday's candle, we did get a move below the 20-period moving average, but we didn't get that close near the low of the day. So we did see a pretty decent fight from the bulls yesterday to try to recover some of the losses. I mean, it still was a negative day yesterday, that it was not that confirming move below the moving average that I want to see. When you start to see these levels broken, you really want to see, on the downside, you want to see those sessions close near the low of the day. You want to see a pickup in volume. We have not had that to confirm yet. So what that tells me is that there's still a decent fight. There's a decent tug of war going on between bulls and bears, and we have not seen the trend develop yet that I want to see. If we get this thing to head back to the downside, let's take a look at some support levels below us. We've got some swing levels here right around 160 and right around 159.50. And then, of course, just like the other markets, any 0.50 or 0.00 level, those are going to be areas of support and resistance to watch as well. So based on all these charts, I want to be a little more aggressive on the downside should we get short trades to print. Okay, if this thing recovers back to the upside, I'm going to be a little more conservative with my position size and the strategies, and that's just due to the fact that we've got a lot of resistance up above us that we have to get through in order to get anything to materialize on the upside. Okay, so before I wrap it up, let me quickly go back to some charts. Let's take a look at some individual names that we could potentially have plays on here over the next couple days. Let's zoom into the chart of SPY. So this is our active swing trader system. This is the system that I use to give me the entry points, targets, and stops on all of my trades. We've got this potential short trade setting up on SPY. The system gave us an entry point at 192.62. We always adjust those entries below 0.50. I already discussed that on the overview charts. But so on this trade right here, I'm moving my entry down to 192.40. So I am not yet short on SPY, but I definitely have an alert out there. If we hit that entry point, I'm going to be looking to initiate a bearish position. Okay, that could potentially be some put spreads, some long puts. If we get volatility to pop, we could even sell some call spreads in there as well. So I'll be looking for that level over the next couple days to see if we can play the downside. And my ultimate targets on the downside would be 188.75. That's the level that I'm looking at for the target with a stop up in place above 195.50. Okay, so I'm looking to play the downside on SPY. I'm looking at QQQ, the NASDAQ ETF once again. Okay, so just to summarize, I'm looking at the daily charts for overall market direction and trying to establish an opinion on what I feel the market's going to do. My actual trading signals are coming off of these charts here. These are actually range charts. And you can clearly see the setups outlined by the dots. So I had this short setup here from earlier in the week. We did trigger into a short. We hit our first target at 103.13, and like we showed on the overview charts yesterday, we did get a bounce up off of the lows, and unfortunately, because of that bounce higher, I did get wiggled out of that trade at break even. So we are now flat on QQQ. I'm just waiting for the next setup to print on my chart. Ideally, what I would like to see happen is have us come up, test the signal line here, that dashed yellow line, and then head lower. If we get the test of the signal line and then a red candle off of that signal line, we'll get a new short setup that we could potentially act on. So I'm still looking to play the downside here on QQQ over the next few days. We'll just see if the market gives us anything to work with. Quickly, some of the other individual names that we have moves developing on. Google had a short trade. It did trigger in. We still have the potential to grab it here. The entry point's at 650.66. I'm looking to play this move to the downside with some long put spreads. Okay, see if we can get the same things to materialize on the downside. See if my bearish outlook turns into anything significant over the next couple of days. So I'm looking to play the move lower on Google with a target down at right around that 629.50 level. Stop in place at 664.56. Netflix is another one that we do have a short trade in progress. Netflix has been very, very weak, and it was due for a pullback. We've actually seen some decent two-way price action, but over the past number of weeks, Netflix has definitely seen some damage done. We have this short trade in play. We have a small profit on it. We got short right around the 98.86 level. We have targets at 96.77 and 93.83. The stop at 103.77. So I'm playing this with a long put spread, and I want to see what happens here over the next couple of days. See if we can get some selling pressure to kick in. See if we can get some follow through to kick in instead of just this back and forth price action on a daily basis. Some of the financials, you really have to take your cue from the financials these days. I mean, it's hard for this market to make a decent sized move without participation from some of these financial names. So I personally trade Citigroup and Goldman Sachs. We've got this short trade going on Citigroup. We've got a tiny little profit on it. Target's down at 49.79 and 49 even. Stop up at 52.71. So looking for some downside follow through here on Citigroup. But of course, if this one does bounce higher, okay, most likely the overall market's gonna follow suit and move to the upside as well. So that's why I always want to keep a close eye on these financials. The good news on the other one that I trade over on Goldman Sachs, we just had this short trade hit target yesterday. Okay, so even though I'm still holding short on Citigroup, I exited my trade on Goldman Sachs right at this target here at 178, 179 even. So a couple different trades going on this one. I had a long put spread, but nice move there on the downside on Goldman Sachs. Finally on energy, and then we'll wrap it up here on XLE. Kind of in a holding pattern here. Energy has made some very large swings back and forth, most recently to the downside. XLE, one of the energy ETFs that we track, we've had some really nice success with it over the past year or so. We've got this short setting up at 61.66. It hasn't triggered in yet, but if it does, we'll be looking to put on some bearish positions with long put spreads, short call spreads. We'll just have to see what happens when we get down closer to that entry point. We're actually, if we take a look at the Market Watch tab, we've actually got XLE with some decent levels of volatility. Okay, so when you take a look, let's go over to the trade page here. It's probably a better view. So on XLE, we actually took advantage of some of the higher volatility going back a couple weeks. The volatility is right up near that 50th percentile. So we actually decided to play the potential bounce higher in XLE, and we sold some put spreads. Okay, so we've got a position going, trying to play a bounce higher in oil prices. If that does not materialize, the nice part about selling a put spread to play a potential bounce higher, because we're selling premium, we can also profit from a sideways move if we continue to be choppy. If we get a small move lower, we can still make money. If we get volatility to decrease, if we get time decay to add up, we profit in all of those potential scenarios. So we've got multiple ways that we can profit from a move higher on XLE. So I like our position right now. The only way that we're going to be hurt on our short put spread is if we make a big move to the downside. So if oil kind of falls out of bed yet again, that'll hurt my position. But right now, I currently like our trades that we have on, and I'm going to continue to hold. So before I wrap up the video, let's take one more look at the futures. They have rallied up a bit here over the past 20 minutes or so. Currently up 40 on the Dow, up 4 points on the S&P, and up 13 on the NASDAQ. So the bulls are trying to do their best to hold this market up. But like I've said over the past 20 minutes, if we can get some selling pressure to kick in, if we can get that session to close near the lows of the day, there's a lot of potential moves, a lot of potential names that I like on the downside, and that will really open things up here for us over the next week or so. So those are some things that I'm looking at here heading into Wednesday's session. Hopefully that helped you out, get a glimpse in how we trade options here at NetPicks. I'll be back later in the week. We'll review some of these charts that we talked about, see where things are headed here as we head into the weekend. So I'll be back here on Friday to wrap up the week. Happy trading, everybody.